Welcome back to Stocks by the Numbers, and I wanted to do an update here on Philip Morris International, ticker symbol PM, listed here on the New York Stock Exchange. As you see, the company recently had about a 10% pop on phenomenal earnings, and this is one that obviously I've mentioned multiple times, did a bunch of videos over the last year or two, whenever the heck I started the channel, and I basically said that not only is this a brand name company, not only at the time were they paying you over 6% dividend yield when the stock was down here at sub 90 back in April. But also, more importantly, I mentioned that this is what's known as a defensive product, meaning that they sell obviously cigarettes. Now they have smoke free, they have the Zyn pouches and whatnot. And if you're a smoker, obviously, whether the economy is good, bad, or ugly, you're still going to go to the store, buy your pack of cigarettes. Philip Morris making out like a bandit. The Zyn pouches flying off the shelves, they couldn't even keep up with the production, which is why they were citing, supposedly, analysts were trying to keep the stock down, because they were saying that, if you can't produce them as high as your demand is, then you're obviously A, taking in less money, and B, could potentially lose those customers just because you don't have the product available, so they might look for an alternative, right? But PM recently hitting new highs here, $131.97. Did an update all the way back here, sub 90. I mentioned on X, I wrote in the Discord multiple times that in my opinion, if you were looking for a long-term position that kind of quote unquote was the closest thing to, in my eyes, a guarantee, it was something like PM, long-term growth with the dividend. So let's find out what's going on. If we come here and we look at the earnings that came out just yesterday, we can see that the company beats on the EPS side, bringing in $1.91 a share, estimates $1.82, beating that by almost 5%. The revenue almost hits $10 billion. Revenue estimates jumped up to almost $9.7 billion. The company reports $9.911 billion, beating by almost $250 million, or almost 2.5%. So phenomenal quarter for PM. Again, drives the stock up to almost $132. And if you back up again, you can see, unfortunately, as I mentioned, I deleted my cookies recently, so I lost all my trend lines. That was on an old TradingView account, so you're going to have to bear with me. But we had this long-term symmetrical triangle that we spoke about. Stock started to climb up and out. They got the news that they were able to hit more international markets. If you recall, we did an update a while back. But obviously, it's just working out phenomenally well for Philip Morris. And if we come down here and look at the numbers, we can see the market cap now up to about $203.5 billion. After the stock runs from 88 or wherever it was to over $130 a share, we're still getting paid a dividend yielding over 4%. Just phenomenal in my eyes. PE ratio sitting down here at sub 19 after running up. And of course, that beta is essentially flat. Again, the beta is the volatility of the stock in relation to the overall volatility of the market. So we can see that PM is usually not as volatile as the market. EPS has been climbing very nicely, 3 beats in a row, beating 3 of the last 4 quarters. Revenue maintaining the high 8s, jumping up to the 9 billion milestone here, and now as of last quarter, almost a 10 billion milestone. Look at the net margin percentage off of that 9.9 billion also, 31% net margin percentage. Absolutely phenomenal. So the company is, that their products are just wildly popular. Again, they're flying off the shelves. Profit margins increasing. You really just can't get better than what we're seeing from Philip Morris here. So obviously, congratulations to all shareholders. Philip Morris's Q3 driven by smoke-free products amid rising market share in key regions. Analysts forecast growth across IQOS and Zyn brands. This is an analyst out of Stifel reiterating a buy rating on Philip Morris, raising price target to $145 from $138. Yesterday, the Marlboro maker reported third quarter revenue of $9.9 billion, up 8.4% year over year, beating estimates of sub 9.7. Growth in smoke-free products is driving both organic revenue growth and market expansion. Net revenues increased by 11.6% on an organic basis, mainly reflecting a favorable pricing variance primarily due to higher combustible tobacco pricing and a favorable volume and mix, mainly driven by higher smoke-free product volume. There is a strong argument for owning the stock thanks to the impressive and accelerating growth of IQOS and ZYN brands, which supports robust long-term business expansion. Analysts highlighted that market share is growing steadily in important regions like Japan and Europe, with Europe's share hitting 9.5% this quarter. So this is what we spoke about. This is why we saw the pop on that last update when they were allowed to, I think they were allowed to do like marketing and advertising to some international places. Again, don't quote me. I don't remember exactly what the article was. We look at a lot of stocks and a lot of articles here on this channel, but you can go back, you can look at that update, and we and analysts alike were saying at the time that this is probably only going to help PM, which is why the stock was up on the news when it came out, and it continued to remain bullish since then. And now we have earnings coming out, and you can see that, again, EPS revenue well above expectations, and they're just talking about gaining market share in Europe, 9.5%. Absolutely phenomenal. So most of the flavor bans in Europe are now in place. Analyst adds that the rebound in in-market sales and market share shows promising growth potential for IQOS in the region. Philip Morris has raised the low end of its U.S. ZYN volume outlook for 2024, now expecting 570 to 580 million cans. That's just in the U.S., which is an increase of 10 million at the low end. Analyst estimates a total of 579 million cans, reflecting over 50% growth. These numbers are astronomical. For 2025, analysts expect 9.5% EPS growth, driven by 8% organic revenue growth and margin expansion from smoke-free products. This includes a 10% increase in organic operating profit, supported by volume growth and over 7 percentage points from price mix contributions. Really seems like nothing but good news here. Maintained overweight JP Morgan raises price target from 125 to 145. Stifel raises price target to 145 from 138. Maintained that sell by UBS. Price target 103 to 105. All right, they're trying to be the odd man out. In my opinion, Philip Morris is a stock that you really shouldn't bet against, again, because we mentioned how defensive it is. And people used to speak about quote-unquote recession-proof stocks like McDonald's, which personally I've attacked a few times on this channel, stating that the stock is severely overvalued. And now, of course, we recently had the news of the E. coli outbreak, but, we didn't really see that coming. But either way, again, McDonald's, as we saw, kind of turned some people off because they weren't catering to the low-income consumer. The prices just kept going up and up. They were maximizing profits to help out shareholders. Philip Morris, we understand inflation hits their products as well, but again, this is truly a defensive product, right? If I'm addicted to cigarettes, I'm going to keep going to the store and buying my cigarettes. If I really, really like McDonald's, even if I have that ability, chances are I'm probably not going to go there, 4 or 5 times a week and make it, a must-have in my schedule, in my diet, right? But something like cigarettes or the ZYN pouches, completely different avenue that we're talking about here. So that's why when people used to tout McDonald's, and granted, I understand the stock technically is up from the time everyone spoke about it, but I mean, something like Philip Morris, if we go head-to-head with another company, chances are, I'd say at least 9 out of 10 times, if not all the time, I personally am going to pick PM as the must-own, the defensive stock, the quote-unquote recession-proof stock. Goldman Sachs adjusts price target on PM to 150 from 140. Deutsche Bank raises price target from 135 to 142. JP Morgan, 125, 145. We know that already. UBS, Yep. Philip Morris higher. Q3 operating income, net revenue. Operating income was $3.65 billion compared with $3.37 billion a year earlier. EPS moved to $1.97 from $1.32. So almost 50% increase there on the EPS side. I mean, these numbers really are phenomenal. Cigarettes and tobacco products company's net revenue was $9.91 billion, $914 billion a year ago. Quarterly dividend of $1.35. It paid $1.30 a year ago. Philip Morris updated, yes, they also raised guidance on the EPS side. Updated its EPS forecast to the range of 620 to 626 from a previous range of 589 to 601. Net revenue growth of 9.5% is anticipated on an organic basis. So 589 to 601 up to 620 to 626, that's about a 5% increase. We're moving, raise guidance again. Net revenues increased 11.6, primarily due to combustible, Wait, hold on. Philip Morris raised its fiscal year 2024 adjusted EPS outlook to 645 to 651 from prior guidance of 633 to 645. So now the prior guidance high end of 645 is now the new adjusted low end of EPS for 2024 moving forward. Estimates were 641, so now we're well above even the bottom of the range. We're a handful of cents above the estimates on the street right now. Goldman Sachs believes that the management raised guidance is attainable, citing strong momentum in IQOS, improvements in Zyn's out-of-stock levels, growth in the smoke-free segment, and the steady performance of Philip Morris's traditional cigarette business. Goldman reiterates a buy. Analysts particularly optimistic about the significant progress in reducing Zyn out of stock in the U.S., aligning with insights from their recent Nicotine Nuggets Q3 retailer survey, which should help limit market share loss. Quote, ultimately, we believe management's decisions to raise guidance again this year is positive and suggests management has good visibility into its business. Well, if we know that Zyn potentially is really the driving force behind some of this main growth, and of course attaining and increasing that market share out of Europe, and I know they mentioned Japan, then obviously I can agree with the fact that they're expecting these numbers to continue to increase at least for the next, 3-4 quarters potentially in a row. And also, I know they mentioned that, again, they couldn't keep up with production for the Zyn cans. So, technically, this all spells good news in my eyes for PM moving forward. Analyst says third quarter results significantly exceeded expectations. Management raised its fiscal year 24 guidance for the third time this year. They also increased dollar EPS growth projections, even with a larger anticipated currency headwind, highlighting the strong underlying momentum. So it really just seems like PM is just consistently on the up and up here. I just want to see if they speak about the production facility of the Zyn. I believe it was out of Kentucky. Just bear with me here. 149 million cans of Zyn in the U.S. in the most recent quarter, up more than 41%. Said supply constraints for the nicotine pouches were starting to ease. So this is why, again, if that was the one reason why we were keeping it down was because demand was outpacing supply. Now, if that, again, is starting to reach that break-even point, then obviously sales will not be affected. Because I know even people in the Discord were saying a couple of months back, they were like, yeah, I tried the Zyn pouches, I like them, I go to the store's out, they're always sold out, they never get more. So now Philip Morris just taking that obstacle head on and pumping them out faster. Earlier this year, Philip Morris said its Zyn nicotine pouches had become so popular that the brand's sole U.S. factory couldn't churn them out fast enough. Zyn's U.S. sales growth slowed and its market share slipped. Since then, Philip Morris has made efforts to increase production, adding capacity at its factory in Owensboro, Kentucky. Expects to ship 570 to 580 million cans in the U.S. just this year, meaning the company would have to ship at least 154 million cans of Zyn in the last quarter. And as we see, shipped 149 million cans in the most recent quarter. So they're right there. They are right there now with the production of the demand that surged in for their product. So, in my opinion, this should technically, again, just translate to consistently higher ticking numbers on both the revenue side and EPS side, of course, as the company raised its guidance. But yeah, huge demand, and you're seeing nothing but positivities really, except that UBS price target of 105. Interestingly enough, I would bring it maybe to like 120 or something, even if it's lower than the current price. I mean, 105. I don't know about all that. I mean, that's basically where the stock was approaching the top of the triangle and then began to pop up and break out. So, I mean, anything can happen, right? Because we speak about these long-term patterns, and we speak about sometimes these premature breakups or downs, before we reach the apex. So now, again, people are expecting the end of October and potentially November to be the months where the markets decide to drop down and be maybe a little uncertain as we go into this big election year. So maybe what we can see is if markets really do begin to chunk down, we could potentially bring it back down into this triangle and bring it back down to this apex. But we're looking potentially at next quarter, which again is about 3 months from today, which as you see is roughly the first week of February. So, I mean, they could bring it down, but it seems like they're on the up and up here. EPS lower, revenue down here at about $9.5 billion. In my opinion, that really might not be an issue for PM. They might post 9.8, 9.9 billion again. So even if we come back down, we can probably break back up. Especially, also, wait, hold on. We speak about the January effect as well. Again, the January effect is when the year ends, the ball drops for the new year, and then all of these hedge funds and all these fund managers, they look at all their positions, they see what was performing well, what was underperforming, and then they'll consider liquidating one position, and obviously maybe looking at something like a PM and seeing how well they've been doing. So now that, they get rid of the losers and they add a winner. And that's why it's called the January effect, because all of the volume, usually for the most part, begins to surge in to the more fundamentally sound stocks listed on the major exchanges. So that's why when the ball drops and we hit January on the calendar, you're probably going to see stocks like, maybe your Hershey's, your PMs, they're going to slowly tick up throughout January and potentially February as all of these funds now take new positions in them and the volume keeps piling in. And obviously the buy side will outweigh the sell side, and there you go, up and up. But in my opinion, again, I'd probably remain bullish on PM, especially off of this recent earnings report. And of course, after a stock runs and the markets are at highs, as we said, we could probably make the argument for, 99 out of 100 stocks that we look at, saying that, yes, of course, if markets sell off, it can go lower. So, of course, this stock can easily pull back to the low 100s. It can shave, 30 points, no problem, come back down to 100, as we said, and then bounce and break back even higher, 140, 150, over the next, 3 to 6 months. Who knows? But overall, in my opinion, I really do still like PM, and I would probably still be a buyer even up here at 130, because if you do it correctly, in my opinion, and you're able to piece your way in, then as we say, if we started buying and we like it up here at 120, 128, then the stock drops down to 108, then obviously we're going to love it even more. But again, with the higher earnings now, PE sub 20, and still getting, again, over a 4% dividend yield, but $204 billion market cap. 2024 really seems to be a phenomenal year for the company. I mean, we're talking, we're up to like 30 billion in revenue already. And for 2023, the company brought in 35 billion. So we're on pace to hit about 40 billion in revenue, in my opinion, to close out the year. Probably somewhere like 38 to like 40, 41 billion for the year. And market cap 200 billion in change. So we're technically only trading about 5 times current year revenue, with the company, again, just increasing profit guidance moving forward. So if these numbers are only going to get better and better, then hypothetically, if the stock holds this 130 level, this 200 billion level, then by rolling into 2025, now if revenue is up to like 45, potentially 50 billion, then of course it's going to seem even more attractive and potentially undervalued in the numbers. So that may drive that second wave of surge coming in. But only time will tell. Let's look at the numbers real quick. Okay, the debt jumped up here, 50 down to 49. We have cash on hand, which brings us to like 45. We actually have liabilities outweighing assets in both the oh my goodness, excuse me. In both the short and long term, we're sitting here with negative equity right now. And in the numbers, it doesn't quite add up, does it? Almost reminds us of what we see with McDonald's, with the negative book value and the negative equity. But the growth cannot be denied. And our margins are climbing phenomenally well. If we go back about a year and a half ago, we can see gross margin down here 61, 63, 63, 60. Now we're up here 66 as of last quarter. Operating margin jumped back up. It was kind of bouncing around, got up to over 47 at one point, then back down to 30. Now it's back up to 37. Net margin percentage jumped up above 30% for last quarter. Yep. And of course, we're getting paid our nice, healthy, hefty dividend. And the track record has been kind of hit and miss on the revenue side. But the growth here, again, just going back to the beginning of 2023, we're sitting here at 8 billion for the quarter. Now we're up to almost 10 billion we're bringing in around for a quarter. And you can see that going into 2025, they're expecting to break above that $10 billion mark. So Philip Morris, again, another interesting play here, because as we saw just with the numbers, you could technically make the argument about a couple of red flags. Right? We have what? 48 billion in debt. We have 4 or 5 billion in cash. We have negative equity, 7 billion. So if we look at the quote unquote fair value of something like Philip Morris, we could make the argument in the numbers that it could be due for a big pullback or a big sell-off. So this is why if you're someone who just saw it run up and you're kind of waiting for the RSI and everything to get overextended so that you can bet against it, in my opinion, it would make sense. It would make sense. The problem is we speak about that snowball effect, right? Of the earnings, of the good news, of the catalysts. And unfortunately, something like PM, in my opinion, might be a little difficult to bet against, even if the numbers may appear low and weak, just because of the growth that they're seeing in the overall business, and the fact, again, the Zyn pouch is flying off the shelves, they ramped up production, and now they're, beefing up the guidance moving forward. I mean, you're getting nothing but positivity after positivity, right? And something like McDonald's on the flip side, recently, a little bit of an opposite situation, because their earnings, for the most part, were pretty stable. But they recently missed earnings, but the stock went on a tear. And now, of course, they're in a bad news cycle with the whole E. coli and everything. So something like McDonald's, you can understand how a big sell-off could be coming. PM in the numbers, again, a sell-off back to the low 100s, in my opinion, definitely justified looking at the numbers. Going off the current news and the recent couple of earnings reports, in my opinion, it would be hard to bet against. But that's just me. That's just me. But again, they are able to advertise and market overseas now, and they're showing, 9.5% market share in Europe. They're gaining ground in Japan. Almost 600 million cans of that Zyn just in the US. That is wild. So this is why something like PM, again, I know I'm stocks by the numbers, and if we look at the numbers, again, we could make the argument that they're light. Let me check again, actually. As of last quarter, 49 billion, boom. So that's minus 45 billion, minus 52 billion. And we said, okay, we're sitting here at 20%. So if they bring in 40 billion, right, we can give them maybe at least a 25% profit margin. Actually, the margins have been up and up throughout 24. So they might close out 24 with like 27% profit margin on 40 billion. So it's almost like a wash, right? The leftover negative debt, again, cash minus debt would bring us to about negative 45 billion. With the negative equity would bring us to about 52 billion, minus 52 billion. But then if we're expecting potentially to bring in around 40 billion to close out the year with 10 billion in profit, then that's basically minus 52 billion plus 50 billion, right? So the numbers are essentially break even. So something like PM right now, in my eyes, isn't necessarily trading off of the equity or the book value or the cash on hand or how much debt they have on the balance sheet. Again, granted, I will admit those are technically in the numbers some red flags. But right now it looks like Philip Morris is strictly trading off of a revenue to market cap comparison, in my opinion. And of course, because it's a major component, it's going to climb with the markets, which, as we know, have been consistently climbing and hitting new highs. So it's taking all of the other stocks with it. And that's why I also made my argument recently against something like a McDonald's, because the only difference is they missed earnings recently, but then went on a big run from 250 to up to 317 or wherever it went, right? So if Philip Morris has a run like that, you would say, yeah, the equity looks weak, but again, if we look at the growth in revenue and profits and the last couple of earnings, I mean, the company's been absolutely, kicking ass. So to have the stock run up here from 90 to 130 makes a little more sense than the run we saw recently with McDonald's. But again, this is why I say that, in my opinion, pumping markets to all-time highs and just consistently climbing no matter what data gets released to us, this is what makes the market very, very dangerous. So, long story short, do I still like PM? Yes. Do I think it's a buy up here at 130? Believe it or not, in my opinion, yes. Can it go down before it goes up to where you will see red before green, and you may want to add to the position and average down? In my opinion, yes. Especially if we look now at something like the Bollinger Bands and the RSI here, we can see the RSI might not be the best indicator because the stock at multiple times throughout August and September, on the daily, the RSI got well above 70 and the stock just continued to climb like a beast. So the RSI sitting here at 76.5 for something like PM may not be viewed as too high. However, it did just have a big 10% pop off of those earnings. And this is a stock that usually, I feel like on average, maybe you see like 3, 5, 6% pop if it's a really good quarter. But we saw a 10% pop. And now today, again, the stock essentially flat. So here being overextended here with the trumpeting of the Bollinger Bands, in my opinion, it could be due for a slight pullback. It could breathe for a little bit, and then it can try to climb back up and reclaim that 130 mark. But you can see, look at the tightening of those Bollinger Bands going right into earnings. They bring the stock down, have it go below the 50-day moving average, which, as you see, it was trying to hold for the entire month of October, and then boom. Phenomenal numbers, and the stock pops 10%. So we speak about the tightening of the Bollinger Bands, but again, that may have been done due to earnings coming out. But the big moves up and down, we speak about the trumpeting now of the Bollinger Bands, so you can see the widening of these bands, and the stock technically is well above the top one. So we could, again, begin to pull back to the 128 level and readjust and kind of come back down to reality. Obviously, the MACD crossed and spiked up here on this good news, which is probably why, even on a big red day, the stock, again, relatively flat and didn't have a big drop today. Let's switch over to the weekly. And we can see, again, RSI throughout, looks like July, August, on the weekly was well above the 70 benchmark. But you can see that the top Bollinger Band is basically just beelining straight up since the run and the premature breakout from the symmetrical triangle down here at the 90 level. So now, top Bollinger Band 133.15. So, I mean, if it wants to, it could technically run up to that level, but in my opinion, I am expecting a pullback at minimum to about 120, if not maybe about 114.5, meeting up with this mid-Bollinger Band. But the MACD, of course, crossed to the downside and then crossed back to the upside, and now because we have such a big surge in the stock, you can see that we're well above the cross and technically still remaining bullish. But again, RSI on the weekly sitting here now at roughly 79. So we may start to come back down to earth a little bit over the next week or two. Let's check the pivot points real quick and I will let you go. So obviously we are well above all previous pivot points here. This previous top line resistance throughout 23 on the weekly looks like about maybe 111. So again, if we do have a big pullback, as I said, we could see a pullback to the low 100 level. On the daily, we can see we have top line resistance here at 130.97. Technically, the stock closed above that level again, which technically means it's still bullish. But again, with the overextended RSI, with the stock popping out of the Bollinger Bands, we may start to reject and pull back to the previous pivot point here of about the low 126s. But I think right here we have a lot of action with the 50-day moving average. We have a pivot point right here at 122, moving average 121. So in my opinion, that may be where the pullback happens. And then it comes back down to earth. RSI drops down to whatever, 55, and then the stock may step and start to climb up from there. Because again, even the analysts minus UBS, basically all analysts across the board remain bullish on PM and have recently raised their price targets to 138, 145, 150, and so on and so on. So that's pretty much it. But PM, again, one that I've been trying to update for you guys, and I know it's not the most popular stock that people look for, but as I always say, the boring ones, the slow ones that fly underneath the radar, that aren't trending, that the kids don't trade, that no one really talks about, in my opinion, those are the stocks to own. And that's why I made multiple alerts down here at 91, 89, 88. And I let everyone know that, in my opinion, if I had big capital on hand, I would consider putting a chunk of liquidity into something like PM and riding that long-term wave. So congratulations to shareholders, because again, if you got in here, you are up roughly 50%, plus getting paid, 5.5% dividend yields this whole time going up. Again, still yielding over 4%, but I spoke too long, so that's it. I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.